Alright, for this video I wanted to go over the IRS Form 1099 INT, and specifically I want to talk about issues with reporting accrued interest income on your taxes. So this is going to occur when you're buying or selling bonds between the payment dates. Alright, so I've got one slide in front of us covering some background information on this issue, and then the fact pattern we'll be working with. And then I do have a few PDF documents. So I've got one. This is a standard 1099 INT. This is the form provided by the IRS. And then I do have a 1099 composite. So this is what you would likely see if you have a brokerage account, right? So the brokers kind of have their own form, but the 1099 INT elements are the same. It's just reported in a different manner. And then we do have the tax return itself for our taxpayer, John Q. taxpayer. So we'll go through how all of this is reported on your Schedule B and then how it impacts your tax return. So if I go back to the slide to start with, let me run through this and then we'll get into the exhibits there and then the return itself. So the 1099 INT reports interest income that's paid to a recipient, right? That's kind of the general idea here, right? So for individuals, interest income is going to be reported on your Schedule B. And for the most part, you can kind of just enter what you see in boxes 1 and 3 directly on Schedule B, and then that's it, right? So it's not too complicated. However, if you have bond interest income, or if you're trading bonds, you might have some adjustments, and that's going to be the discussion that we're going to cover in this video. So what do we do with bond interest income? So under the regulations, when bonds are sold between interest dates, part of that sales price is going to include the amount of interest that is accruing up until the date of sale, right? So if you buy a bond between the payment dates, the purchase price is increased by however much interest is accrued on the note, right? It kind of makes sense. Now, the accrued interest, though, when you buy the bond, the accrued interest is not taxable to you, right? It's taxable to the seller of the bond. And that's where this adjustment comes into play here. So the problem we have with 1099 INTs is the accrued interest that you pay on a bond if you buy it between the payment dates is not reported anywhere in the 1099 INT. It's provided as supplemental information, which generally the broker should track for you and provide for you, but it's often missed because I see too often they'll do exactly this with their consolidated 1099. They'll enter all these fields here where appropriate, but then they stop, right? And it's buried in the additional information where we have those details on accrued interest paid when we buy bonds between the payment dates, all right? So how do we report these adjustments? So the total amount of interest in boxes 1 and 3 is got to be reported on your Schedule B, right? That's fine. And then it's separately stated we have adjustments for any accrued interest paid if we're buying bonds between the payment dates. And there's also instructions for how we treat bond amortization. So if you have bond premium amortization, it can also be listed as a reduction on Schedule B as an ABP adjustment. And so we'll look at that when we get to the Schedule B too. So let's look at the fact pattern, and then we'll go into the return itself and see how all of this is working. So in our fact pattern here, we had John. He purchased 3 separate treasuries, and then all of these were done after or between the payment dates, right? So the accrued interest on the treasuries that was leading up to the date that John purchased them is added to the purchase price of the bond, and the interest is attributed to the seller, right? It's not attributed to John at that point. Now, John only held the bonds a couple days, and then he sold the bonds before the next interest payment date. So again, the buy and the sell is between the payment dates. Now, the accrued interest reported in box 3 on John's 1099 INT represents the amount of accrued interest when he then sold it, right? And then again, the 1099 INT doesn't have a box that shows the amount of accrued interest John paid when he initially bought those bonds. So again, if we look at the 1099 INT, if I look at this standard one here, We can see interest income boxes 1 and 3. Again, this is going to include the accrued interest paid when you sell the bond, but there's no box here that shows when you purchase the bond how much of the purchase price included the accrued interest, right? We don't have any field for that, and so that's why it's separately reported as supplemental information. All right, so when John bought the bonds, the amount of accrued interest on that date of sale was $12,874. And again, that's not reported anywhere on the 1099 INT. And when he sold the bonds, the accrued interest totaled $13,135. And this was included in the 1099 INT. All right, so let's have a look at the consolidated here. And hopefully when you see these numbers, it'll all kind of make a little more sense. So this is the 1099 INT. The boxes, again, they correspond to the same template that you would see from the IRS. It's just the broker has their own kind of presentation here. So box 1, this is regular interest income just earned on the earned on the savings account with the broker, so nothing unusual there. And then in box 3, we have interest from our savings bonds and treasury obligations. So the total, $25,630.7. That's reported on Schedule B, right? That's the gross amount of interest income coming from these treasuries. Now, when we look at the detail as to how that's made up, we can see that reported here in this top half section. So the $25,630 includes 2 components. So it's the amount of interest that was actually paid into the account when the bonds matured, right? So that's that piece there. But then we have the accrued piece that John had to take ownership of when he sold it, right? So the accrued interest, accrued interest from the sale of the treasuries is $13,135. So that $25,630 figure is reported on Schedule B. Now, what about the adjustment? So the adjustment here is the interest paid on the purchases. So, and again, this is not reported on the 1099 INT. This has to be separately tracked either by you or the broker will do this for you. And it's normally buried pretty deep into the consolidated 1099, so it's very important that you read the whole thing. So the accrued interest paid on the purchases were these amounts. So again, these are the amounts that when John initially bought the bond, how much of the accrued interest was added to the purchase price when John bought it. And that's this piece here, $12,874. This is the adjustment. So this is the reduction for interest because, again, this is accrued interest that was attributed to that initial seller, not to John. All right, so when we look at John's Schedule B, we have here he's got some interest income from a couple of bank accounts, right? So small amounts there, not attributed to this broker. But the brokerage company here, there's the total, the $25,992. And so if we look at, let me show you, the $25,992 is a combination of these 2 pieces, right? So the $361.35 plus the $25,630.7. So there's our $25,992. That's reported on Schedule B, right? And then the Schedule B instructions asks us to provide a subtotal. So we have a subtotal of the gross amount of interest, $26,029. So that's those 3. And then we have our adjustment. So we're going to have a negative adjustment for accrued interest, and then the amortized bond premium is also adjusted there. So we can see here the accrued interest is a reduction of $12,875, and so that is, again, the amount of accrued interest paid on purchases. So we have our $12,875 reduction. And so when you take the $26,029 minus this figure, the net amount of interest that's taxable to John is this $12,919 figure. All right, so again, the teaching point here, the takeaway is you really, really need to be careful when you are buying and selling bonds to make these appropriate adjustments. Because you can imagine if you simply just looked at page 1, these are the boxes, enter all of this, and you didn't go into detail to look at those appropriate adjustments, you would be significantly overstating the amount of interest income that's reported on your tax return. So report the amounts as they're shown on the 1099 INT. This is all fine. But remember to carefully review all that supplemental information, because you want to be careful of things like accrued interest on bond purchases, which are not taxable to you. They are taxable to the party from whom you purchased the bond. All right. And so these kind of occurrences will happen, like this example where you bought and sold between the payment dates, or if you bought in the payment between the payment dates and held it to maturity, you would have the same issue. So really, really important to be careful when you're trading bonds. Make sure you're not overstating the amount of income on your taxes. All right, so that covers it for this video. I hope that was helpful. If you have any questions, leave me a comment below, and I look forward to seeing you again on the next video. Thank you.